Welcome, welcome. How we doing, guys? Dude, we're all just loving your chart today. You were right on it. That was perfect. Yeah, man, those are all the right places to be. I cashed my IGBs today. I think I might regret that. I know I told you I hit those a few days ago. But dude, I just couldn't say no to this. I mean, I even cashed them like right here, like shortly off the open. Sold them like basically right here. I mean, just pushed up to this little resistance, but I'm on the same page as you. Big old major daily double bottom. I think software definitely wants to turn it around. Now, I keep forgetting about that one. I want to be in there. Ooh, looks like I missed it. Didn't I? Ooh, what's going on with my charts? Dude, they've been weird all day. What's that trend line? Yeah, and I like it. I mean, I like it still. Like I said, I mean, I had those end of March contracts, and so as we get into March, it's typically going to be best to just sell those things, and so that was what I did. I mean, no denying we're right back. I mean, I should really have another line on there. Danger zone right here. You're 87, 88 up to that 90 will be tricky. Over that, clear skies ahead. Well, probably breaks it, fails it, then goes. But clear skies ahead for sure. And software's just been so hated. It's about time for it to do some catching up. Now all tech's been hated. Who am I kidding? You filling that gap. Yeah, filled our little gap, gapped over our little gap. Wow. Yeah, that one's probably gonna haunt me. Yeah, so OpenAI is getting in there into. Oh yeah, yeah. That one's on the serious turnaround too. Yeah, they're loving that earnings, huh? Wow. Well, they beat the. They beat. I mean, I know they're not super important, but man, almost doubled EPS. 100% beat on EPS. Market tends to like to see that. That's for sure. Look at that one though. Wow. 11 bucks a share is wild. Husky, how you doing? Perfect attendance. Love to see it. That's a good one. And kind of regretting this one. This CRDO. Oh, those are way over there. But the CRDO's money. Should have got in there. I was eyeing that double bottom. I didn't take it. That's where Buddy got in. That one's sick though. Just one of those, stealth ones that not a lot of people talk about. That's actually super important to all the AI stuff. Who are we capping? Who's capping in here? Salesforce. Yeah. Dude, I don't know. Like, I got something weird going on here. What's going on here, dude? Why are we? Oh, I have no idea. No wonder. Go. Yeah, that's actually a beauty. Yeah, but see, man, I would have waited on that one and I would have missed it, obviously. But yeah, what was that? 1,000 bars to the right? Dude, I did not type that in. I don't know what happened there. Almost have hit some stupid button. Man, that was actually pretty nice, huh? I definitely would have missed that myself just waiting for lower, but definitely reasonable enough buy out that 180, I guess. Welcome, welcome everybody. We'll give it a couple more minutes here. Yeah, all these things just look the exact same. It's funny. Yeah, oh yeah, dude, all software is just working. I mean, they like obviously, and you're a bit, you love trading these software names, and so um, hammer them. I mean, you're happen to be in the sector, that's right, and so that's what really, you know, that's uh, that's what you want to do, and I'm sure you might have been like a little bit early on them on some of those names, but it doesn't matter. I mean, you're buying some of these names that are down 50, 60% off highs on some like nonsense that AI is going to take over their stuff. And like, let's be real here, you guys. AI can't even type out a post yet that people don't think is AI, like you can spot an AI post from a mile away. These software things ain't going nowhere. And in fact, AI is probably just going to get integrated into them anyway. So software is an easy buy. And you happen to be on it early, not early in a bad time, but like you were watching for this buy to show up, so you did real good on that one. Yeah, Crashmas, I agree. I got, I got a hunch these are gonna come back and haunt me, but we'll see. Everything's been haunting me lately. The paper hands have been insanity. Give me one more second. Yeah, there you go, dude. Congratulations, for real. It's like I said on Trade For, you're one of those few people out there that actually puts in the work. Like the people that come to classes every week, though, you guys also put in the work. But you put in the work, you find what you like. Let's just get Shop Robinhood onto a real broker. I'm just messing around. I love Robinhood. My Robinhood's on a heater this year. I bet. Oh, I mean, Alex, that's perfect. That is perfectly on topic. We're gonna touch on it a little bit. Uh, So I'm gonna go out on a limb here. I'm gonna say if you're talking about Asia/London session, you might be diving into a little bit of ICT stuff. And I'm going to tell you right now, just stop that. If that is what you're doing, you don't have to say you are or aren't. But if you're looking at ICT stuff, stop right now. Quit wasting your time. However, if we want to talk about some pre-market highs and lows, as opposed to the different sessions, no denying that there is some volatility when those markets come online. But all this kill zone, blah, blah, blah nonsense, that people talk about these days, not a lot of concern to me. As far as some pre-market highs and lows, I will take note of them. We're going to talk a little bit about it tonight, actually. But I'm never going to be the type of person that's going to put like I'm not going to chart out a pre-market high and low, but I might take note of it and say, okay, hey, we've broken below it. We're double topping at it, and this is to me is a beautiful double top. We're double topping right around these kind of like pre-markety low areas. I guess we were lower there, but these areas. I short this today. I longed this today they're, as with all levels, they're great because they can give you a stop out or take profit point. I know that 1K, he loves those levels. He loves the previous day's high and lows. He loves the break and retest on those kinds of things. So you know, plenty of great information. Like I said, I don't put them on my chart. However, I always have the pre-markets and after hours up when I'm trading because I do think we see very important information there. While it is very low volume, we can see it right here. There's so little volume in that time that nobody's really trading it. And here's real volume, but this is some big money. This is some of those foreign places. So we can kind of see where people feel comfortable buying and selling. So I do think that there's definitely a time and a place on it. Okay, give me one more second. I got to make one more post and we will get to rolling. Welcome, welcome, everybody. Second, second, second. Okay, and welcome, welcome everybody. Happy to have you here. Thanks everybody for showing up. Dirty River tonight. Part two of our class last week. Obviously, last week was, it was supposed to be a one-part class. But awesome questions. A lot of, interest in these classes lately. It's been really, really great. Been appreciating participation, attendance, all of that. You guys have been doing awesome. As always, big shout out to all of you for being here. Actually trying to learn something. And so tonight, um, we've done our technical analysis. Obviously, we've been doing, we even touched on fibs a little bit. I got one on the chart right now. But our supports, our resistance, our trends, things to look for when we're trading around those, kind of how to trade around those. And tonight we're getting into the second part of all of this, which is price action. And so, our levels are crucial. Our levels are where we know things have happened in the market before. Do we care that it's 679.25 or do we care that it's 679? No, we just know around here that the market has made moves before. So that is where we want to be putting on trades if we can. However, we aren't always going to be trading around those levels. And you can't, I've been working on this with, a bunch of my friends. I talk to people in DMs all the time, obviously. Generally speaking in OOT, when you really want to start learning, I'm kind of the guy you come to. So I talk about this stuff all the time. And, there's this common misconception with all technical analysis of how do you play it, if we sell down to support, do you just buy it? You don't. It's never that simple. And so when we're discussing price action, to really dumb it down in the simplest way possible, it's what are the candles doing, Are like the simplest price action ever. Are we going up into the right or are we going down into the right? If we're going up into the right, we're trending up. If we're going down into the right, we're trending down. That is the most simple, most basic price action idea that there is. Is there times and places where you enter a trade the second it is presented to you? Absolutely. I actually even have one just by chance highlighted on the screen right here. I was actually long up into here. I sold my longs and I shorted up here somewhere on these, somewhere up here on the highs of these candles. You know, Instantly long to short, generally not a good idea. However, to me, this made sense. It was a nice double top. We knew the last time we had big volatility pushing up into there on reducing volume. That's a key part of this. That we had no success going higher. So as we do it again, I look for the exact same thing, reducing volume. I guess I can even, lift my chart up a little bit. So again, reducing volume as price is going up. I love that because to me, it becomes very, very easy to say this move is not going to hold. All of that is price action. What are the charts telling us? What are the things on the charts telling us? And specifically, what are the candles telling us? You know, People always, they ask me, well, why do we study price action? Um, and it's because price action is what we need to learn to actually be successful in the markets. We want to say, what are these charts telling us? So one of the most crucial things that price action does for you is it helps you understand the market and remove your bias. And don't get me wrong. I mean, I made the half joking thing yesterday that, I was excited for today because I wanted to short the whole market. So obviously I had a bias that I wanted to be short today. Anybody who was in voice chat with me this morning knows that we were definitely short on the market today. So you can build a bias. However, price action is what tells you when your bias is right or wrong. It also helps us identify repeating patterns in the market. And so when I am saying repeating patterns, I just, we talk about this a lot. I beat the drum on this all the time, so we aren't going to get into it too much tonight. When I am saying repeating patterns in the market, I am 100% in no way, shape, or form talking about bear flags, bull flags, head and shoulders, none of those low probability patterns. I am as far from a pattern trader as you can possibly be. I'm sure many of you have traded with me where I said, hey, we're short in this bull flag or we're long in this bear flag. I mean, here's a beautiful one on the chart, just an absolutely textbook bear flag. No questions asked. People are shorting that thing. And you can go find my post on Pro Trade Floor where I'm telling people to get long at 11:30, 11:40 this morning because those patterns just aren't effective. So when I am saying repeating patterns in the market, the only named pattern I am talking about is things like double tops, double bottoms, triple tops, triple bottoms. Just again, not going to talk about it too much. The reason I like those patterns is they are those patterns until they are not. A double top is a double top until it's been broken. A double bottom is a double bottom until it's been broken. Or triple bottom is a triple bottom until it's been broken. Are sometimes they not going to work? Absolutely. Here, yeah, yeah, this one right here. That's a double bottom for those who don't know. So are they always going to work? Nope. Because look, you're right here. Here is a very nice setup on a triple bottom that absolutely failed. We can kind of, we can use some things in our favor to understand why that failed and why, I wasn't buying that triple bottom personally. But we want to be able to identify, well, this has happened before. You guys might have heard me say these things like in voice chat or whatever, like, I've seen this before. I ain't buying it. What I mean by that is we've seen the market do this before, and especially this market, it's beautiful. Since November, you guys, I've been telling you to buy at 675, 676 for months now, and I've been telling you guys to short. Anytime we're getting up here above 690, quit being long, quit chasing longs, quit looking for that kind of stuff. The market it's been in a range. So we look to be long down here. We look to be short down here. That's price action. We know when the market is sold down to our 670, 675 zone, it rips. And when we push up to our 690, 695 zone, it craters. It's done it time and time again. We saw it yesterday. Everybody all balled up, people on trade floor saying, if you're bearish, get your eyes checked or whatever. And then we flushed $12 the next day. You need to be aware of the market. You need to be aware of the price action of the market. You guys have heard me for months now saying the price action, if anything, is more bearish than bullish for now. Not saying I expect the market to crater or anything like that, but I definitely feel a lot safer shorting bounces. And that's all for price action. The other thing that it helps us do is it helps us not make these like stupid, outlandish claims. If you're in here, I apologize, but we had a person in here 677, 678. They're up nice. They're short. They're up nice. And then they say, oh, yeah, I'm looking for 665. Well, what about all the stuff between us and 665 and all these places that we bounced and we haven't been able to get down there for months? And not to mention, it's $10 lower after a $12 sell day. And they ultimately lost money on that trade. So price action helps us not make these outlandish claims. We know that if we're short and we're selling down to these 675, 670 zones, you should be looking to exit, not get short. As we bounce up to these highs, you should be looking to get short. And you can, of course, be looking to get long down here. I just felt more comfortable shorting the bounces than swinging long. So that's what we do. And that is what price action tells us. It also tells us what is actually happening. And that's where a lot of people miss what is going on. And it's not, this is, a little bit of trading psychology almost, but people have this unbelievable way. Really, I mean, SPY is a perfect example. They see a big green candle and all they can think is calls. And they get smoked, or they see these big red candles and all they can think is puts. And by the time they're chasing it, we're bouncing because they aren't living in reality. They aren't looking at the charts. They aren't looking left on the charts to say, okay, what has the price action done at 679.25? Generally speaking, it's taken a big old bounce up to 683. In fact, it has done it time and time again. And when we get under it, obviously, we take big sells. I know this is in the after hours, but when we get under it, we take big sells. So we know that is a nice little inflection point in the market to trade around and a truly terrible place to be getting short. This is all from price action. It tells us what charts are doing. It tells us what is actually going on. And the single-handed most important thing that price action does for us is it tells us to admit when we are wrong. I think that is the number one skill that traders lack. I don't want to, again, I'm not going to call anybody out by name, but I was in the voice chat today, and somebody held puts through this entire move up and then eventually post the screenshot that they're up 150%. They were minus 80% on these puts, and people celebrated them holding. That was like, I was I was embarrassed for voice chat right there. Encouraging that is really bad trading. Do we all sometimes get blown out, trades get away from us, we say forget it. I'm down 80%, I'm holding, like I'm not going to take my last 20 bucks out of this when I already lost 80 of my 100. We cannot trade like that. I always try to tell people, I'm not mad that you made money. In fact, I'm super happy that you made money. There's nothing I hate more than people losing money. But that's horrible trading. I can be perfectly happy for you that you made money. And then I can tell you that was very, very, very dumb. Never do that again because, you risk losing more money. You should just take that reasonable stop. I see a couple of people mentioning this. It's me too. Rest assured, it's me too. It is everybody in the market. We will all get blown out sometimes, and we will all get saved after those blowouts at some point. The issue is, 99% of the time we don't get saved. So that's why we don't want to build that habit. So price action is what tells us, hey, you're wrong. We were going down into the right and you were short. Now we're going up into the right and you're long. That means that you are on the wrong side of it. And don't get me wrong, I do love whatever you want to call them, reversion trades, bounces, things like that. I'm a scalper, well, mostly a scalper in voice chat. And so I love to see it sell down to resistance or support, hammer it, try to catch bounce up to resistance. Technically trading against the trend, but really just buying at a point where people that are much smarter than me and much richer than me have bought before. So I want to see if they will buy again. That's all I'm trying to do. And so then again, we've spent the last couple of weeks, learning trends, learning ranges, learning support and resistance, supply and demand, whatever you want to call it. Same thing, same thing, different jacket, whatever it is. All of that is price action. Price action is what is actually happening on the charts. And so we started to touch it on, some of these things last week. One of them was obviously reversal candles, these types of things. Again, I don't call them hammers. I don't think you should call them hammers. I think what we really want to focus on in price action is just what are the current candles telling us? And what did the previous candles do at this same point? So a trade like this, I know because these are my levels and I traded it. I know that this is a big area that I can reasonably enough try to catch this bounce. So you see, I zoomed out a little bit on my chart here. What I teach, I'm sure what 1K teaches, what any good trader teaches to you is if you want to know what the chart is going to do to the right, where are we going? Look to the left. So this one today was beautiful. All we do is we look left. Here's our big level. Here is our low of day from yesterday. So somebody was asking a little before the class, do I worry about these pre-market levels, highs, lows, the different sessions, things like that? I will say yes. But I am generally concerned. I'm not concerned with all of this. This doesn't interest me. This interests me. I can put some circles so we can see it. This interests me. This interests me. This little section interests me. And this interests me. So I got a few candles I care about, a few areas I care about. That is it for me. I'm not going to be charting them every day. I'm not going to be worried about them. I am merely going to look at that and say, okay, we did something here before. Let's see if we can do something here again. And so when we're trading a market like this, we look left. Um, Big old double bottom, yesterday's low. I'm a buyer of this ugly red candle. The closer we get to here, the happier I am to buy it because the tighter my stop is. Most people are looking to short this. They're trying to chase. I won't say most people. Most, newer traders are going to be looking to short this. They are always looking for continuation. So again, and I'm not trying to call out the person in voice chat. If you're in here, don't say your name. I'm not trying to be mean to you or anything. But so we had this person in voice chat, not my voice chat, because I would have ridiculed them, as you guys know. Held the puts all the way up, catches this dump down, then holds this bounce back up. Then voice chat starts talking about, oh, we are going to dump, we are going to crater. Oh, short this thing, short this thing. By the time they are finally looking to short it, I'm a buyer. I bought here for the exact reason of I know what has happened here before. So that is what we want to look for and how we want to trade. It is what prevents us from over trading, taking bad entries, things like that. We are letting the charts tell us what to do. So now we start analyzing our candles after our entries. We can analyze these candles, we can analyze these charts as much as we want before the trade enters. We can still be wrong. You can be the greatest person on the planet at TA, and sometimes it doesn't work. And you can be the greatest person on the planet at TA, and a lot of the time it works. That is trading. If it was easy, if there was something that was literally 100% win rate, everybody would do it. And so this is when we start analyzing, for me, candles and volume. And so in last week's lecture, when we first started talking price action, we were talking a little bit about candles and we were looking for, some reversal candles, things like this, big wick on the bottom, closing above the midpoint. I don't care if it's closing above where it opened. I care that there is more wick than body and that, a lot of people will look at this candle and say, oh, red candle, bearish candle. Not at all. Wildly bullish candle. No questions asked. Wildly bullish candle. This thing was hideous, and the bulls showed up and they smoked the bears by the end. That's all there is to it. We love those kinds of candles for trading. Well, in trading, there is only two kinds of candles. There is trend candles and there is range candles. And so, what what is a trend candle? What is a range candle? And how can we use them in our favor? So this is going to kind of teeter into, the number one question that I get is, how do I hold my trades longer? And find somebody in OT that paper hands harder than I do every single day. We fumble multiple 100% trades every single day. It is just part of trading. However, we want to use the candles to tell us what to do. So as I said, we have trend candles and we have range candles. What's a trend candle? It's something like this. It's a bearish red candle closing near its low. We get another bearish red candle closing near its low. These are trend candles. Range candles are more things like this. We have some wicks going up. We got wicks on top. We got wicks on bottoms. We got a green body. We got a red body. Wicks on top, wick on bottom. Nobody is really winning here in a big way. These are just range candles. If we go to longer time frames, we really start seeing we're going nowhere. Nobody is really winning in any of this middle stuff. Like this is an ugly candle and then we bounce. That's a surefire thing that we are in a range. Even down here, these are bunch of inside candles. And so what is an inside candle? It's a candle that basically fits inside of the candle before it. And When you have those inside candles, you are virtually on the road to nowhere until you break out of those inside candles and start to have some outside candles. So we always want to be identifying, do we have trend candles or do we have range candles? And then how I like to manage my trades, and we'll talk this trade. As I said, this is one I took today, mentioned on Trade Floor. I know people hit it in voice chat because I saw somebody, I think it was Avenger, saying, you know, double bottom. And then I believe voice chat said, what double bottom, LOL. So then we bought this double bottom and then we printed money. So how did I manage this trade? We bounced up. I just moved my stops to the bottoms of these candles. They're range candles, so they aren't telling us a lot. But anytime we go set a new high, I just kind of bump my stop up, bump my stop up, bump my stop up. Well, then we run into these big ones at the top, same as over here. So I'm a big volume trader. I watch volume all day. I watch volume in multiple ways. Something that I know and everybody in the market should understand is if the market is turning around or bouncing, it is not going to do it on reducing volume like we see down here. So I am not buying this. If I'm long off the lows, I'll stick with it until the trade tells me to get out of it, but I'm not viewing this as a reversal. So then it leads us into something that I wish people would pay more attention to. It's a very, very valuable type of candle to learn. I call it an exhaustion candle. I'm sure there's other names for it. I'm sure people try to call them like liquidity sweeps or whatever dumb shit. Sorry, pardon, pardon my language, but I call it an exhaustion candle. We're bouncing on low volume, and then out of nowhere, one big candle on still not great volume. I exited. I could look up because I was talking to friends when I was in this trade. There is like a 99% chance that 1 minute before this candle closed, I exited because this to me is an exhaustion candle. And so, what do we mean by that? We don't just mean a big red candle or a big green candle. We mean slow grind up. It is oftentimes going to push you to a previous resistance or dump you to a previous support. And it is going to be Al Brooks when he talks about this kind of thing. He says the market has a truly unbelievable way of printing candles that make you think one thing is going to happen and then doing the exact opposite. So that's what people talk about liquidity sweeps, blah, blah, blah. I call them an exhaustion candle, and an exhaustion candle is a real thing. A liquidity sweep is a tinfoil hat type of mindset. Go listen to your great old traders, your Al Brookses, your Peter Tuchmans, those kinds of guys. They will all make fun of the people who discuss, liquidity sweeps. We want to look for this type of thing. Low volume, big candle into previous resistance. This is one of my favorite setups in the market. It also is our nice little double, triple top, whatever you want to call it right here. Nice little double top. And so how can we put a trade on right here? We know we are buying up to this double top. So we know where our double top is. We know where our big resistance overhead is. This trade, in any trade, you need to know three things. And in my opinion, this is the order of importance. Entry. Entry is the most important thing to any trade. If anybody tells you otherwise, they are wrong. I'm telling you right now, they are wrong. If all of your trades are going minus 30, 40% before you make money, you have an entry issue. So, most important thing we can look for, entry. Next most important thing that we need to identify are stop out. If you don't know how much money you are risking on the trade, why are you taking the trade? Always ask yourself that. And then, third most important, take profit. Who cares? If you're making money, you're making money. You need to have a target in mind, of course, but focus on your entry and your stop out. They matter more than anything else. And what I teach is entry can make a good trade great and make a not good trade not too bad. So this is a perfect setup, and the price action lays out the trade plan for us. Here is our double top. we want to enter as close to the double top as we possibly can. Our stop is a break over 683. It's all laid out. It's all laid out right there for us. Every single thing is laid out for us right here. So that is what is important. That is what price action tells us. It builds part of our trade plan for us. So we see our big old ripper exhaustion candle on low volume into previous resistance with very strong daily levels overhead. We can, if you aren't long, you can watch this whole move happen. Not do a dang thing for an hour until your entry shows up to short it. So now we're shorting 682.50. I'm calling it 682.50, so the math is easier. Our stops are a break over 683, and our target is, we'll call it 679.50 for easy math again. We are risking 50 cents for a potential $3 move down. This is a trade you should take every single time. The chasers, the people who always think that, big green candle means we are continuing. The chasers, they see this and they buy it. And the price action again tells us, why would you buy here? You can buy here and your target is 50 cents overhead and your stop has to be below previous lows. So you have 50 cents potential for upside and you have a $3 stop. So you have a what? A 6 risk, 1 reward trade. That is really, really bad trading. You will never last in the market looking for trades like that. And so I always encourage people to, we let this whole thing move. We let this whole thing move. We watch it come. We see our exhaustion candle show up. So just to go a little bit deeper, the volume will help you identify this. See this whole grind up, how the volume is just dropping, 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 dropping. And it's basically, 50% red, 50% green. No one side is really winning here. Yes, the market is going down. So obviously, yes, the volume is going down. So obviously the ratio is getting a little bit tighter here. But no one side is really beating the other. And then we finally have one candle where it is solid buyers. And very oftentimes, that is going to be the end of the move. If it's not the end of the move, then if we're short, our stop is tight. No big deal. We got 50 cents of risk on the trade. It makes it worth it to put that risk on the trade. So then we can see ultimately we get a small reduction in volume with sellers winning, sellers winning, sellers winning, followed by large increase in volume with sellers winning in a big way on the break of our level, exactly where we would want to see it to potentially stay short on this trade. So this is the market helping us and saying, this is the bull's last ditch effort. Are there going to be times where you're going to start seeing these green candles and we're having a big increase in green volume? So it's not just that, you can't just look at a big green candle and say, this is an exhaustion candle. We need to look at this and say, whole bunch of weak range candles right up to the top of a range, big resistance, double top, and daily level resistance as well, even beyond just the intraday resistance on reducing volume for most of the bounce, every bit of the bounce except for one candle, it's reducing volume. Then we can start to say this is exhaustion. When we're seeing building volume, more buying, more buying, more buying, more buying, more buying, that is where we can say, okay, this move can continue. And these are not exhaustion candles. We can also see it on the other side. This was, as I said, a very ugly candle. I'm sure many people were trying to short it. Look at this volume. Reversal candles, like we've discussed a little bit, will oftentimes have large volume. Why will they have large volume? Because the bears were in control. We were having some aggressive selling. Like if you don't call a $5 sell in 30 minutes on SPY aggressive, I don't know what to tell you. And then we were met with strong buying. In fact, we were met with more buying than selling on this red candle. So that's why we can't get hung up. Is the candle red? Is the candle green? Yes, this candle closed red. And there was, in fact, more buying than selling on this candle. So these are the types of things that we really want to look for in price action. What are the charts telling us? What are the candles telling us? Is there something to help us stay in the trade or exit the trade? Do we have volume in our favor? We discussed these range candles. Well, for trend candles, like I said, a range candle, not much happening. Al Brooks describes it as barbed wire on occasion. I mean, maybe that'll help somebody visualize it. Wicks on top, wicks on bottom, small bodies, not, candles not going anywhere. Trend candles are like this one, technically a trend candle, but we know it's not a helpful trend candle. This is a trend candle closing near the lows. This is a little bit of a range candle. And what do I mean by closing near the lows? Very small wick on the bottom. I would even like a better wick on the top, but no big deal. Then we get a range candle. Now, again, strong sell, closing near the lows, full body red, small little consolidation inside candle. Again, another trend candle. Strong red candle closing near its lows. Again, strong red candle closing near its lows. All of a sudden, what do we see here? It might be a range candle. It is an inside candle. We're seeing some of the highest volume of the day. This right here, this candle right here, coupled with this volume, should virtually make every single person quit looking short. There's no reason to be looking short down here. The charts are telling us there's no reason to be looking short down here. Did we sell a little bit more? Yes. But this is one of those things where if you guys are in VC with me or whatever, and I'll say something like, I wouldn't take a put for free. It's because I've seen something like this. Did we sell another dollar? Was there money to be made? Absolutely. But I'm not going to get short down here, 677. Maybe we get down to 676, but my stop's over 679.25. I'm not going to risk $2.25 to make $1 downside ever. So we stop doing that. And now we're going to touch on my very last price action thing. And I should tell you guys right now, I could do like 40 classes on price action. There's a million things to learn. I'm trying to get you guys looking at trend candles, looking at range candles, looking left on the chart, and a little bit of intro to volume. And we're going to do my final price action thing. So this is a market statistic, and this is going to be so this is going to be interesting for people to listen to. And it's going to take your mind a little bit to grasp it and actually start identifying these things. I don't want to say, before they happen, but in a timely enough manner that it can actually help us. So, something that I talk about a lot, and this is statistics. This is real. I'm not just making shit up. Statistically, moves in markets will very oftentimes have about three legs. So, we're going to go down a little bit, and then we're going to bounce and go down a little bit more, and then go, bounce and go down a little bit more. Three legs is a very, very common thing. So anybody who trades with me, you will hear me talk about three push wedges, or wedges, or wedge bottoms, or wedge tops, or those kinds of things. And what do I mean by that? I am absolutely in no way, shape, or form talking about falling wedges, rising wedges, any of those types of things. I am discussing market structure and price action. So, some things that we might look for are wedges and wedge bottoms. And what are they going to be? They're going to be something like this. Where, we've come down, and so here's our first leg of it. We've taken our bounce up. Now we've bounced back down and we bounce back up. And now we come back down a third time and we bounce back up. This is a trade, and as I said, you guys know I was in there. I take this trade every time because the probability is high. Um, I like this example right here because we know, we've got some reversal candle, a potential reversal candle. We've had a little bit of consolidation. We know where our buy is and we know where our stop is. Now, I said I like this example, and this is a good example. And why do I like this example? Because of this. And so this is a personal preference thing. I mean, I believe Al Brooks says it as well. This is a personal preference thing. Because I do like to play regression trades and things like that and look for bounces and look for rips to short and that kind of thing. I'm not trying to bottom tick. I'm not trying to top tick. I'm trying to extract money from a point in the market where I think a move could come. Well, this candle's crazy. This candle's way blown out of our trend. And so we might have even had our trend originally drawn like this. Well, when I see my first reversal candle come, which I consider this one, at least an attempted reversal candle, I'm going to move my trend to here. And why am I doing that? And again, this is a personal preference thing. If I can have one of these legs, and I don't care if it's the second one or the third one, if I can have one of these legs outside of the trend, that actually makes me happier. And it comes back to that exhaustion ideal. They tried to break us and they failed to break us. So we get a nice reversal. Obviously, we don't have this trend drawn here, but by this candle, we do. And we can now say, we've made our one leg down, our two leg down, our three leg down. We look for a bounce to resistance. If the trend is down, we're still looking to short this bounce overall, especially when it lines up, like we discussed it would. And then is the market going to completely reverse off of here? Maybe, maybe not. We are in here to catch a piece of the move. That is all we are in here for. We don't care if the market reverses, We're catching ourselves a $4 bounce. How much more do you need? We are happy with this move. We are also, again, thanks to the price action, we got our three push wedge. We have our reversal candle, so our wedge is kind of confirmed. We know we want to be buyers around here, and we know that we're going to be stopping out on any strong selling under the trend. Because if it breaks, you're likely going to get some selling, I mean, even here, we got some selling even later off of the trend. But look for these three-legged moves. So then again, it's not always going to be three legs. Maybe it's going to be four legs. Maybe it's going to be four legs on the 5 minute, but it's going to be nice consolidation on the 15 minute or really nice consolidation on the 30 minute. Something that you will notice is, how charts change based on our time frame. So this was again going into end of day. This was a trend that I had drawn, and this is a trend I mentioned to people. I mean, granted, it was a phone chart posted on Pro Trade Floor, but we're setting a wedge bottom down here. Was it three? Nah, it was four this time. But we knew the spot where we wanted to buy. We knew where we would be stopping. We knew our risk was low and we knew our potential reward was high. So look for these wedges. Look for them all over the markets. They oftentimes will show up. They will oftentimes be, I won't say points of reversal, but very apparent points where if a reversal is going to come, it's oftentimes going to come there. I love a three push wedge that has a double bottom involved as well. The more things we can stack in our favor, the better we can do with this. And so this is what I look for time and time again. So final note, and then I was trying to leave us, oh God, we're going to be close. I was trying to leave us like 15 minutes for questions. So final note on these. It's a wedge. So I don't want to call it a reversal pattern, but it is a point where we can look for a reversal. So obviously, if we are looking for a move to the upside, our wedges need to be present on the downside. We want the lower lows forming our wedge, looking for a bounce. If we are trading on the upside, let me see if I can find one that lined up with a quick scan. Well, we haven't had a lot of updates, huh? Give me 1 second. I'll see if I can find a good example. just so I can, demonstrate. God, just a lot of selling in this market lately, huh? Yeah, I just am not really liking any of these. Well, nah, man, I'm just not liking any of these. Not a lot of. Ooh, here we go. So finally, when we are looking for a reversal on the downside, we are gonna want to see something like this. And I actually love that this one's showing up because it wasn't smooth. The other ones were smooth. Sometimes you're gonna get this, but when we're looking for a reversal to the downside, this is the kind of thing we want to look for. We still get our first leg up. Here's our second leg up. Here's our third, fourth, fifth, sixth, seventh, eighth, ninth, tenth, whatever you want to call it, leg up. But what we really care about is that this is not breaking. And we're looking for a move back to the downside. So if you take nothing away from this lecture tonight, please take range candles, please take trend candles, and please take three push wedges. They will really, really, really help you. You can find them on all charts every single day. They are showing up. Are they always going to be super crisp and clean? No. Are they sometimes going to be quick like this? Here's your first leg, your second leg, your third leg, you take your ripper? Yes. Are they sometimes going to be like this spy one that we looked at? That was, this was hours of waiting for this one to end up working out. This one was quick. So sometimes they're going to be fast, sometimes they're going to be slow, sometimes they're going to be on the 5 minute, 15 minute, hourly, daily. We don't care about time frame. You should analyze all charts the same. You're seeing a big old three push wedge on a daily, trade it. They are great. You're seeing a big double top on the daily, trade it. It's no, it is easy, easy money. That's even like AMD today. I was short on AMD today. I shorted it somewhere up here, I don't know, 201.50, 202, something like that, just because I was looking left. Look at all this mess right up here. We've had no success in that thing moving to the upside, one nice bounce. Chip trades just hated all the time, and so we got this nice move up. We said, maybe it's an ugly double, triple, quadruple top, whatever it is, but being short is greatly, greatly favored up here. There's zero, ignore these levels. There's zero reason to be looking long on AMD up here, in my opinion, and for how I trade. Plenty of reason to be looking short. Should you be looking for a, whatever that is, $8 or $9 dump? Absolutely not. Like, you guys know how I trade. I was out right here. No questions asked, And I think I actually shorted here and had the bounce go against me, and then, I'm out here, let these charts tell you what to do. Then, as we start selling down major levels, double bottoms, probably ugly, hideous little three push wedge, start looking for longs. Don't be the person shorting the bottom or longing the top, and don't get me wrong, I did it. God, like I'll never forget one got on Tradefloor here about 2 months ago. One day I was like, I'm just gonna zero or here are some spy calls. Man, I bought those spy calls and I don't think spy printed another green candle that day. So sometimes you're gonna be wrong, or you're gonna long the top or short the bottom. That's the way it goes. But don't let yourself be doing it too often, And so with that, 8 minutes left. What kind of questions we got? Burrito, did you see exhaustion candle? I can go back to it real quick. Main one that I was talking about was just this big old green one. Came after a bunch of trend candles on unimpressive volume into a double top. Oftentimes going to be exhaustion. Yeah, always be wittied. Yes. Well, it's tough. So people don't understand volume. People say, oh, low volume day. When somebody tells me low volume day, I basically instantly assume they don't know a ton about charting just yet. Volume should always be viewed as a ratio. We've all traded low volume days that grind up all day long or sell down all day long. Think of volume as your gas pedal. High volume, moves come faster and moves can be sustained. Low volume, moves come slower, but they often grind in the same direction. Reversals on low volume can be aggressive because it doesn't take much volume to get it going the other way. But think of your volume as your gas pedal. Don't be the person, oh, low volume day on SPY. Don't be that person. Low volume is great to trade in. In fact, it's easier to trade in. It's less stressful. But think of, exhaustions are going to be lackluster. Momentum is going to be like, oh wow, they buy it. When it's coming. SoFi. Be like this one, I missed out on it. Huh. Yeah. Thanks. Thank you. I was really wanting a daily example. So here you go. Three push wedge. Even got the poke outside of it. Very defined stop under us. Obviously, this is hindsight trading. We got to act like we're great. Burrell's probably in here, right around here. No, that guy, he tends to be on it. But here we go. Here's our three push wedge. And, just as the example, this took from February 5th to March 2nd to form. Here's our buy. And where's our stop from our trend? 40 cents below us. I just treat it to break under the next daily level because if we're going to get under that next daily level, we might poke down a little bit more. We can, of course, start looking left, see what's happened here before. And we've gone on face rips, off of this whole zone down here has been our face rip zone. So you're three push wedging us into these lows. You look for the long here, and your stop should be, in my opinion, below this next daily candle. So beautiful, beautiful one. And thanks for all that is it. That is just a beautiful, beautiful daily example of it. Exactly what I needed. Oh, you were saying 15 minutes. I hadn't scrolled down. Let's see. Let's check your 15-minute. Um, let's see. Who says my 5-minute? Let's check our 15-minute. Oh wow. Well, I mean, there's honestly kind of sort of one even right here, where you can almost be looking for that reversal or something. Wow. But you also got your nice little, basically just strong trend up here. Man, that thing's ready to make a move, some more move. Yeah, I don't really like this one though. If I was to try to do something like that, something like that. Let's see what else we got here. So how do you plan? Great question, Fancy. Um, how do you plan it without a level close? You don't. So you want that level. You want that additional confirmation. You can see on this one, our next level is $2 lower. And yeah, don't get me wrong, we're looking for $3 up, but don't hold to that. Use these previous lows. That's what you want to do. And don't get me wrong, $2 is close. And if you're trading one DTs, two DTs, whatever it is, like that can be reasonable enough. But really just look for closes under that trend. However, this is a much more ideal setup. Three push wedge, one exhaustion. We've printed a reversal candle. We're at a big daily level. We're at an intraday double bottom as well as a double E, triple E bottom with the previous day. As with all trading, get as many things in your favor as you can. And as you learn how three push wedges perform, you can maybe start to try some of these. I don't want to say riskier ones, but slightly less defined ruled ones. We know double bottom breaks were out on this one. Trend breaks, double bottom breaks were out. We can understand that. This one would leave people with a few more questions. So it really use your previous lows, use your trend line for that stop out. Husky, yeah, I mean, I would love to. And if people want them, feel free to tag me and or tag MMA and say you like them. We can sit here and we can talk about charts, and it's going to be like, we've talked about like a million things tonight. That's how price action is. It's like, look at this, try to identify this over and over and over again. So if you guys want more of these, I can talk price action all day long. It is my favorite thing. You guys know I love charts and I love talking about what charts could do. How do you trade the first few hours of the day? I gotta be honest, I wish most people wouldn't. Just don't start trading for an hour and you got some really, really good information after the first hour of the day. However, you trade your daily levels and you don't care. Don't get me wrong, these first two, three candles of the day, nobody has any business trading those if you don't know what you're doing or don't have a very, very solid plan. But you get in there 15 minutes, you use your daily levels, you look for your double bottoms, you look for these like bounce points. Like we can even see early in the day, yeah, I'll buy, this is a reasonable enough bounce to try to catch that scalp. We shorted it personally, shorted the bounce as opposed to catch the bounce. Reasonable enough to catch a nice little bounce here. We know our zone, and this is what, 30 minutes into the day. So you still use what's on the chart. And maybe you don't have information from today, but you got information from yesterday. And what did SPY do here yesterday? It absolutely exploded. And what did it do here this morning? It absolutely exploded. It ultimately sold it all off, don't get me wrong, and I was bearish coming into the day, but none of that matters. We look left. And maybe we don't have the info from today, but we have it from yesterday and we have it from the day before. And we know this zone moves us. Oh yeah, there you go. Yeah, yeah, I knew you'd be in there. Nice one, Real. Love it. Well, yeah, Roro, but so like I'll be the first one to tell you. Sometimes I am the type of guy that maybe, do as I say, not as I do on occasion. I might make those decisions, but I got a little experience about this, I've been doing it for you know, 15 years or whatever. So I can have, it doesn't make it any less risky, but it does, it does. I've seen a candle or two in my day, is I guess is what I'm trying to say here. Uh, but it doesn't change. Like, I mean, I think, and like, there's going to be a lot of people that like hate to hear me say this, but like, trade lunchtime. And people are like, oh, don't trade, it's lunchtime. That is the most stupid advice I've ever heard in trading. Trading, if you like start trading at 11 o'clock Eastern time and trade until 2 p.m. Eastern time. You will find so much more success trading the lunchtime hours. There's wonderful moves. They're oftentimes on lower volume. You can frequently find reversals during lunchtime. IV is reduced, so contracts are cheaper during lunchtime. I mean, the reasons to trade lunch far outperform the reasons to not trade lunch. There's just this retail logic that really picked up 5, 6 years ago. Never trade lunchtime. They'll just burn you. And oh my God, it is the worst advice ever. I mean, anybody who has spent time actually sitting and really watching charts day in and day out knows that lunchtime is such a sick time to trade. Like I love it. I'll be honest with you guys. I would 100% not do voice chats at open if it was completely up to me, but I know people love it. So I do it because I love you guys. I love trading with you guys. I have so much fun with all of you. So I trade the open. Do I think we should be trading the open? No. I mean like, you know, real things start happening an hour into the day. That's where we should be trading. But it's fun, It's fun. Or it's not fun. Or sometimes you just get just roasted and toasted 5 minutes into the day. Like there's nothing worse than having to stop out 5 minutes into the day and instantly you're having to fight your way back to break even or green after 5 minutes of trading. Like that sucks. And that gets in anybody's head. So most people just shouldn't do it. Like, give the market an hour after open and stop trading an hour before close. And most people would find a lot more success. Okay, well, we got any more questions? I'm just hanging. I got nothing to do. So if there's any more questions, I'm happy to answer them. But if not, thank you everybody for being here. Super fun lecture. I know we talked about a lot. There's a million, million, million things to do. And so, uh, or a million things to talk about. So I understand. Yeah, Husky, you're the goat, dude. You're my brother. Thank you. Thoughts on anchored VWAP? I like it. I never ever use it, but it's perfectly reasonable. But I use normal VWAP every single day. It is an indicator that, are indicators necessary? Absolutely not. However, VWAP helps. VWAP is one of the few indicators that it doesn't matter if you have $100 port or if you run a $50 billion hedge fund, you are aware of where VWAP is. And so I'm not going to tell you to use the original, the normal VWAP over the anchored VWAP or anything like that. But I do think having VWAP on your chart is very, very beneficial. I will say on the normal VWAP, I personally don't use the deviation bands. I just want the actual VWAP line, so I turn off those outer bands on it. I think there's better Though I did play with them, and they're very good as well. I think there is better deviation things that you can use than the VWAP ones. Let's see, Fancy, you got a question? Rookie question, huh? What do we got here? Times of your trade and you take a DTA that's too small. How to manage the exit if the profit target doesn't come soon enough? Oh man, that's the age-old question. Um, you take your money. Uh, when we are option traders, we are fighting against time. Time is every option trader's enemy. So you need to just take the money when it's shown. We all joke all the time, like, me paper handing stuff, and I love people joking about it. I love people having fun with it. It's well thought out. And, do we paper hand a trade basically every single day? Absolutely. I'm not going to deny that. However, 9 out of 10 trades, we're selling where we should be selling and we're taking our money. So people just have this really, really uncanny ability to, forget the 9 out of 10 and remember the 1 out of 10. Um, but there is a little something you can change it up. So a very easy thing to do and something that I actually recommend to a lot of people. Halfway through the day, go one DTE. Use the morning. Use that first couple few hours for zero DTEs, higher volatility, nice scalping, blah, 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 potentially catch an early trend. And then once we're halfway through the day, go one DTE or go two DTE. I know I 1K, he loves two DTs. I don't know why he picks 2 days over 1 day. But halfway through the day, just add a day to expiration. Rather than be 3 hours to expiration, be 1 day and 3 hours to expiration. It will solve a lot of your issues. Again, I'm the bad example. I mean, you trade with me every day. I see, we talk all the time. You're always in my voice chats. Yeah, I'm in there trading zero DTEs. I'll be the first one to tell you that it is a terrible example to set. You, when you trade a zero DTE and you trade a one, two, three DTE, you're making the same dollar amount. Delta is delta. They all have 40 delta or whatever it is. So the $1 move on the stock is paying you $40. The only difference is cost. So dollar return will be the same on each contract. Where it changes is percentage is different. Where it gets a little bit tricky, is you can buy two zero DTEs for the price of one DTE. So each of those contracts potentially has the possibility to make you more money. You got two contracts that can each make you $40 as opposed to the one contract that costs more that can make you $40. However, if you're having trouble staying in trades, and again, I am not telling you to hold through this. I don't care if you have one DTE, two DTE. If you're holding through this, stop. If anything, take advantage of some zero DTEs in a very obviously scalpable range, but add that one DTE about halfway through the day, and you will start to have a much easier time holding those things a little bit longer, being able to manage your trades, doing some of those things, that I teach about of like, and it's no secret. I was telling people to long 676. Well, you start seeing candles like this, trend candles. Obviously this one was ugly at one point, but trend candles closing near their highs. Just start using the bottoms of these candles as your stops, and you'll catch a nice run. I mean, obviously this one, well, I mean, you might have got stopped out there, but like you can catch runs like this. And okay, not like this is like $8 or whatever. Those aren't normal, but you can catch a nice move up, catch the whole trend, and use the candles to tell you what to do. Dude, I don't know about that. You don't want to be like me, but you're doing good. You're doing good. That much I know. You're one of those people I see working. We got a bunch of people working here. See Crash, see Avenger. I mean, Avenger is the absolute fucking worst, but you see all these names. Scotty, Sasana. Oh, TSB, dude. We got all kinds of OGs in here. Thank you guys for coming. Yeah. But Avenger, that guy is the worst. Okay. Any more questions? Anything at all? If not, we'll be calling it. Yeah, Fancy knows. Yeah, he's the worst. All the homies hate Avenger. Yep, Prita knows. Prita knows. Everybody knows. Dude, that thing's just on a heater. I just didn't have enough time. Oops. Look at that. The giant things up almost like 20% 2 days off of those lows. What in the world? 16% 2 days. Jeez. Oh, dude, Avenger is so much worse than Norvin. I did. I tried buying your stop. Let's see. Yeah, I tried buying your stop. Yep, Roro, thank you. Thank you all. Okay, too far. Well, that's too far. What happened to Norvin? He's the free chat mod now. He didn't get removed. He removed himself. That's what Norvin does. He has a really bad day, then he blames us, and then he cancels his subscription when like, I'm sorry, Norvin, none of us were in whatever random stock you were in to lose all your money. But yeah, he's holding it down in free chat. He's still here. Love that guy, just for reference, love that guy. But Yes, he does love to yell at me. Yeah, he is the OOT mascot. Okay, well, if that's going to do it, thank you guys all so much. I really appreciate you being here. Great questions as always, great participation. Love it. Happy that you guys like this lecture. If you like them and want more, make sure you let MMA know. Julia, let those guys know that you like them, and I'll keep on doing it. And then, of course, for anybody, I do see a couple names in here that I don't recognize. If you don't know, my DMs are always open. If you ever have a question about anything, send me a message, send me a chart, whatever it is. Let's talk about it. DM's open to anybody except Avenger. So really, just let me know. Yep, I agree. I agree. Okay, right on, everyone. Have a great rest of your night, and we will catch you all later. Have a good one.